Hey there, MTG Tribe. Welcome back to another insightful Morpheus Swing Trading video. In our last video, we discussed how the Nasdaq and S&P 500 had recently plunged below their 50-day moving averages, and we said that powerful indicator could act as resistance on a bounce. And that's precisely what happened. As anticipated, the Nasdaq and S&P 500 nosedived on August 24th after both indexes gapped into resistance of their pivotal 50-day moving averages. Look at how precisely the 50-day moving average did its thing, causing a sell-off. Now, if you paid attention to our most recent market video, you should have already been prepared for this potential sell point. But we're not here to brag. Rather, our goal is to empower you with the knowledge to become a winning swing trader and learn to trade with confidence. So today, we dissect the stock market's recent twist and explore key support and resistance levels of the major indices to help determine where stocks may be headed next. We also revisit the chart of Celsius, CELH, which neatly retraced to the potential MTG buy point that we mentioned in last week's video, and then zoom back to its all-time high. And finally, we alert you to Remitly, RELY, a top relative strength stock on our radar that could be setting up for potential swing entry in the coming days on a pullback. Before we dive in, don't forget to hit the like button and subscribe to ensure you never miss out on our timely analysis to help you navigate the markets. Also, remember that nothing we say in our videos is financial advice. It's simply our interpretation of what the charts are telling us. So let's see what the charts say. All right, let's start by taking a look at the benchmark S&P 500 index. This is the S&P 500 ETF, SPY. And in our last video, the S&P 500 had just broken below its 50-day moving average on August 16th. There was a big movement down below the 50-day moving average on high volume. And in that last video, we said, watch the 444 level as a key resistance area, and we had drawn this horizontal line to show you how the prior resistance level of the prior highs would once again act as resistance since we broke below that level. And the 444 area was also where the 50-day moving average was at that time as well. And we said that if we got any rally attempt, that the 444 level would act firmly as resistance. So since then, we got a little bit of a move lower. We held on to these prior lows. We said that we would find support at the prior lows of June 26th. And notice how we came down just shy of that level and reversed. But after 4 days of trending back up, we ran firmly into resistance with a gap up on August 24th that gapped up right into resistance of that 444 level, which was the 50-day moving average, as well as convergence of the 20-day moving average at that same price. So you can see here the 444 level firmly did its thing. Technical analysis, once again, did not let us down, and it predicted that we'd get a move lower. Now, on Friday, we did wrap up the day with a bit of a bounce, and we stopped right at resistance, but it was on higher volume, which is encouraging. So in the coming days, here's the levels we want to keep an eye on. First of all, we want to keep a close eye on support of this August 18th swing low. So let's go ahead and draw a horizontal line right here. So the 433 level is going to be a key support level you want to watch in the coming days. If we break below this prior swing low, then we're going to have a lower low and a lower high, which is confirming kind of this new downtrend we've entered into short term since the highs of July. So if we break below that level, notice we do have a little more support at 431, going back to the prior lows here from June. So basically that 431 to 433 area, we could dip below and undercut a little bit, and that's okay if we snap back above it. But if we convincingly slice below the 431 level, then the next stop could definitely be this trend line right here. And as you may recall, this was our uptrend line. If we scroll back, going back to actually the lows of October 2022, we've got an uptrend line that's developing. So that could be our next stop. And we also have a major level of horizontal price support right here, which converges. Notice how that converges right with that uptrend line right around the 418 area. And that's because this prior resistance level of this prior base before we broke out, that now will act as support, because a prior level of resistance acts as the new level of support after the resistance is broken. So if we get, kind of zoom back out here, if we get a sell-off down below this 433 level, definitely watch for the 418 area to be a major level of support that could provide some lower risk buying opportunities. But if we hold above the 433 level, then obviously this 444 area remains a key area of resistance, and more specifically, the high of August 24th, which is right around 445. So if we get back above this high of August 24th, that would actually be a pretty bullish price action if we can get back above that on higher volume, and if it sticks. Then obviously that's a pretty bullish sign. But in the meantime, we could see some choppy price action as prices chop around and the bulls and bears battle it out to decide whether we're going to hold these swing lows or whether we're going to break down to form a new swing low. So a bit of caution is in order here in the coming days because we've broken below the 50-day moving average. We're below the 10, 20, and 50-day moving average, but we're still holding above this prior swing low. So the bias definitely is on the bearish side in the short term, but keep an eye on the price action and these key support and resistance levels we mentioned. Next up, let's take a look at the Nasdaq 100 Index ETF, QQQ. And in our last video, we had showed how the Nasdaq was actually showing relative weakness to the S&P 500. The Nasdaq had already broken down below its 50-day moving average 4 days before the S&P 500. So in our last video, the Nasdaq was right here. And we said that in our last video, keep an eye on that 357 level, which was a key area of horizontal price support that we see here. And sure enough, we dipped below that just one day, undercut it, and bounced back above it. An undercut is where we basically dip below an obvious level of support and run stops, and then the prices reverse higher. Also, in our last video, we said that the 50-day moving average, just like the S&P 500, it would act as resistance in the Nasdaq. So 4 days later, we got a gap. We gapped slightly above that 50-day moving average, but the bears were ready and sold into strength of that gap up. And just like the S&P 500, we bounced on Friday on higher volume, which is encouraging. So in the Nasdaq, in the coming days, keep an eye on the support level of the 357 area. And of course, we've got support, more important support of the swing low from August 18th, which is right around 355. So this is a key support level to watch in the coming days. As for resistance, the 20-day moving average and the 50-day moving average, and of course, more importantly, the high of August 24th. If we get above 372 in QQQ, that's going to be very positive change of sentiment in the short term. If we don't hold this 357 level and this swing low of August 18th, then just like the S&P 500, we've got an uptrend line here, which goes all the way back to the lows of December 2022. So we could look for some major support to be found right at this uptrend line around the 348 area. So that's the area to keep an eye on for support in the coming days, and we've got resistance. Just like with the S&P 500, you want to be prepared for choppy, indecisive trading as the bulls and bears engage in a tug of war while we try to determine whether the market's going to hold these prior swing lows or whether we're going to form new swing lows. Before we take a look at the two stocks that we're going to talk about, it's also worthy to point out the relative weakness we've been seeing lately in the small cap index. This is the Russell 2000 Small Cap ETF, IWM. Now notice the relative weakness in the Russell 2000 Small Cap Index because unlike the Nasdaq and S&P 500 index, we've not even bounced into resistance of that 50-day moving average, and the small cap index broke down below the 50-day moving average ahead of the S&P and Nasdaq. So we've got relative weakness here in the small cap index. Now, why does that matter? Well, typically we keep an eye on the small cap index as a gauge of the overall market's health. When there's more risk that's being taken in the market, we tend to see more strength in the small cap index. And as the market gets more risk averse, then we see more weakness in IWM and the small cap index. So this is just a kind of a secondary indicator you want to keep an eye on, because if IWM remains weak, and especially if it breaks below its swing low here, below the 182 level, that's going to definitely be a heavy anchor on the rest of the market. So keep an eye on the performance of the IWM in the coming days in relation to the S&P and Nasdaq. Let's take a look at Celsius. This is a great example of the power of following a rule-based swing trading system. We've been talking about Celsius now for the past several weeks, and when we first alerted you in our video to Celsius, it had just gapped up from a breakaway gap from earnings, and it was looking like this. And we posted in our video 2 weeks ago that this could set up as a potential buy entry, talking about the breakaway gap as being one of our favorite types of buy setups for explosive gains. And we gave you a link and we said there's several ways you can enter the buy entry of Celsius. The first was on a move above the high of the gap up day, which happened the next day. And then in last week's video, the price action was up here, and we said, okay, if you missed our first entry, the next valid entry in Celsius is a pullback to the 8-day moving average. And the very next day, that's exactly what happened. got a pullback, undercut the 8-day moving average, next day snap back above it, and we've rallied all the way back up to the prior highs. So again, if you were paying attention to our videos, you've had not one, but two potential buy entries in CELH, both of which would be showing you a gain as well. So keep an eye on those types of setups when we point out that there's a valid rule-based entry point. Make sure you study our blog post where we actually dive into more detail about the types of setups. For those of you who missed it, we'll go ahead and post a link in the comments to how to buy the breakaway gap, which is what CELH provided us with here as a buy entry. So if you're not in CELH right now, it's a little bit higher risk for an entry point now, but you could look at the next potential buy point as a breakout above the high to a new all-time high above the 185 level. But again, if you have that type of entry, you got to have a tight stop just below this rise moving average to protect against a failed breakout to new highs, especially in a weak market. But nevertheless, CELH is definitely one of the top relative strength stocks in the market right now, pretty much just ignoring the weakness in the market by trading at its all-time high while the S&P and Nasdaq are below its 50-day moving average. And that's a big key to the Morpheus swing trading system, is identifying stocks with relative strength that are more likely to ignore the broad market action. So on that note, let's go ahead and take a look at one other stock on our radar right now that could be setting up for potential buy entry in the coming days, and that is Remitly. RELY is a top relative strength stock. Again, just like with CELH, notice how Remitly had a breakaway gap on earnings back in early August, and since then it's just been trending steadily higher, holding support of that rising 8-day moving average with only just a 1-day undercut, just like CELH, before trending to new highs. As the S&P and Nasdaq are below their 50-day moving averages and is trying to recover, notice how RELY is trading at an all-time high. Now, again, we don't chase, so we always are looking for high risk reward entries with relatively low risk entry points. So if we didn't get a valid entry on the breakaway gap or the pullback, again, it's a little bit higher risk to get an entry point here. But what we are looking for is a potential pullback entry in the coming days, such as an undercut of the rising 8-day moving average down to the 20-day moving average, which would provide a relatively low risk entry point, but we wouldn't want to see a breakdown below this prior swing low. But if we do get a move anywhere to the 23 to 2350 area, relatively low risk buy point if we set a stop price below, just a tight stop just below this low of August 18th, around the 22 area. So if we do spot a low risk buy point in RELY in the coming days, we will be sure to send a trade alert to members of the Wagner Daily Tribe with our exact entry price and stop price. That's going to do it for today's video. We hope you learned a lot and got some powerful insights to help you navigate the markets. If you're not yet a member of the Wagner Daily, head on over to morpheustrading.com and you can learn all about our swing trading services and how we can help you to learn to trade with confidence. See you in our next Morpheus Swing Trading video.